We should expect volatility, I think, from time to time. We're in a period of some uncertainty, questions about China, questions about global growth, and so I think we should expect some volatility. What it means for monetary policy, I think, is not yet clear. It's a complication, it's something we watch, but I'm not ready to say it has some particular long-term effect.
You cannot be the great house in a fluid neighborhood and ignore the neighborhood. So the Fed will look at the rest of the world. The Fed will not want to add to financial instability. And I think because of that, the Fed will wait until December.
The market is really what determines interest rates. The Federal Reserve historically basically just follows the markets. They give out a lot of PR, but they're following the market. Rates were going up. They've come down here in the last 2 or 3 weeks with the turmoil. I suspect you will probably see rates going back up soon as markets recover, and the Federal Reserve will follow along, probably in September, but certainly by the end of the year.
If we've seen anything from the last few days in markets, is that actually investors are starting to challenge some of those high valuations that Chair Yellen warned about earlier in the year. So actually I don't think they need to, and if you return therefore to the inflationary, the underlying macro data, there isn't a compelling case for a rate rise. They don't want to make the same mistakes that the Riksbank did and the European Central Bank did in recent years of raising rates only then to have to cut them again. So I think they'll wait a bit longer and wait to see how turmoil unravels and how the Chinese economic slowdown affects the world economy.